Good afternoon and welcome. I'm Nick Emerson from SI Capital. I head up the corporate broking team. Thank you for joining us this afternoon. Hopefully you can, we're all here to learn about the investment case for Bitcoin and blockchain technology. We'll certainly shortly introduce our guest speakers for the afternoon. Jan, if I can ask you to...
Hi everyone, I'm Jan Scholes. I'm here from Coinsilium today, which you'll hear a lot more about at the end of the talks. Thank you for coming along, and also thank you to our sponsors of SI Capital and CEC Capital and Gabby. Today we've got two great speakers for you, namely Dominic Frisby and Daniel Masters. And I hope you're all looking forward to learning a bit more about Bitcoin and blockchain. I'm sure you've all seen the headlines, the good, the bad and the ugly. And hopefully today we'll just sort of get a bit more of an investment perspective on it, and also the kind of overall view that people have from Dominic. So no further ado, I'd like to welcome Dominic over here. Thank you very much.
Well, thank you very much, ladies and gentlemen. Thank you very much, Jan. It's a pleasure to be here with the elite of the financial world. My name's Dominic. I'm the author of this book, Bitcoin, the Future of Money, widely regarded as not only the definitive book on Bitcoin, but the definitive book. And by way of a show of hands, why don't we start? Who in the room owns some Bitcoins? So I'm going to say that's about 25%, maybe, something like that. And who in the room would say they understand what Bitcoin is?
I have to put my hand up for that one.
Okay. So that's probably, I don't know, 40% or something like that. They did a recent poll, 65% of Americans have no idea what it is, and I think something like 3 or 4% of Americans actually own a Bitcoin. So the problem you find when you're talking about Bitcoin is there's some people who completely get it and have very strong views, and there's other people that have no idea what it is. And so you kind of have to balance these two things. But one thing I would say, I'm going to explain how Bitcoin, what Bitcoin is in very simple terms. But one thing I would say is it really doesn't matter if you don't understand how it works. I use the internet every day. To be honest, I have no idea how it works. I drive a car. I have no idea how it works. You don't have to understand. In fact, most people don't actually understand how the modern system of money works, and yet we all use money every day. So it really doesn't matter if you don't understand how it works. That said, I will explain how it works. So there's my first slide. There you go. Nobody understands how the internet works, how email works, how a car works, how money works, and yet we all still use it. Now, and by the way, there's all these words being bandied about, things like blockchain and disintermediation and decentralized, and all these words. They'll eventually become everyday. You can go on YouTube and look at old footage of people discussing this new invention called email in about 1996, 97, and they're all confounded by the @ sign. And yet, of course, the @ sign is everyday to us now. And all these words that baffle us now will become everyday in the future. So that's really faint, and I imagine you're struggling to see that. So I'll tell you what it says. That says Bitcoin with a capital B and Bitcoin with a small b. Now, what Bitcoin with a capital B is, it's a protocol. Now, a protocol is an agreed means by which information is exchanged. You might have noticed when you type into a website that the letters HTTP appear at the beginning of the website address. And that stands for Hypertext Transfer Protocol. And hypertext HTTP is the protocol by which information is shared across the World Wide Web. You might also have noticed when you register your email address on your phone, the letters SMTP. That stands for Simple Mail Transfer Protocol. That's the protocol by which emails are shared with each other. And so Bitcoin is just another protocol. And the unit of money on the Bitcoin protocol is Bitcoin with a small b. Right. In various accounts online, I've got some US dollars, I've got some euros, some pounds, I've got some supermarket rewards points, I've got some air miles. These are all digital tokens. They don't exist in the real world. even I think 97% of dollars, pounds and euros don't actually exist in physical form. So these are all digital tokens that have some kind of value that at some stage can be exchanged for some kind of good or service. So they're all forms of digital money. Now, if you contrast that with, we have a very nice gentleman standing here. I don't actually have any money in my pockets, but if I did, I could hand you a 50p to you, sir, and you could receive it, and that would be a cash transaction in the sense that it involves nobody else. Now, obviously, if you want to spend those supermarket rewards points, you have to go through the supermarket, the air miles, you have to go through the airline. If you want to spend the pounds or the dollars, you've got to go through a bank or a credit card company or PayPal. All these other forms, all these forms of digital money, all involve going through a third party of some kind. And for years, computer coders had been trying to find a way of replicating that cash transaction digitally. And the problem was this. If I send you an email or a picture or a video, any kind of digital code, you can, if you like, copy and paste that digital code and send it out to 10, 15, 100, a million different people if you want. Now, obviously, if you can do that with money, the money is pretty quickly useless. And this was known as the problem of double spending. And for years, coders have been trying to solve this problem of double spending. And nobody could do it without the involvement of a middleman of some kind. To the extent, there'd been all sorts of, at one stage there was a famous company called DigiCash that evolved in the 80s and 90s. And it was, at one stage it looked like it was going to win the battle for internet payments, but in fact that was a battle that was won by the credit cards. But even DigiCash involved going through a middleman to ratify and process the transactions to make sure that that money isn't double spent. And the breakthrough of Bitcoin was that it was an ingenious new system of automated record keeping, a vast database which is shared, distributed across the Bitcoin protocol. And as soon as a transaction takes place, it is recorded on this database. And once it is recorded, the transaction is complete and final. It is not final and it is not complete until it is recorded on this database. And this database was called the blockchain. And essentially, the blockchain is what solved this program that had been, this problem that had been confounding computer coders since the 1980s, this problem of double spending. And it now means that people can send tiny amounts of money or vast amounts of money to each other directly across the Bitcoin protocol, across the internet if you like, just as I would hand cash to you. And so the way to think of Bitcoin is digital cash as opposed to digital money. And that essentially is what Bitcoin is. The more kind of zealous Bitcoin aficionados might declare that it's going to replace the US dollar or it's going to replace fiat money. I don't believe for a second that is going to happen. It is just another form of money that will in many ways compete, and in many ways it's preferable to fiat money, but nevertheless I don't believe it's going to replace them. That's an argument for the academics to have. Now, who maintains this database? Who maintains the blockchain? And the answer is, you can, if you want. You would simply download the Bitcoin software onto your computer and run it. But why would anyone do that? There's absolutely no reason to do it. It involves a lot of computing processing power running that software. It uses up a lot of electricity. So what Satoshi Nakamoto, the chap who invented Bitcoin, and by the way, I unveil his real identity in this book, what he came up with was a system of rewarding the people that maintain the database. So in exchange for maintaining the database, you are paid, you are rewarded with Bitcoins. And what he's engineered is a system whereby computers around the world compete with each other to maintain this database. They're competing with each other for the reward of Bitcoins. And it's quite kind of, depending on your philosophy, it's either quite kind of Marxist or it's actually quite kind of Ayn Randian, in the fact that these people who are running these computers are acting in their own self-interest, which is the reward of bitcoins, and in acting in their own self-interest, they are bringing service to the Bitcoin community, and that they are maintaining this database which benefits everybody. So that is, in a nutshell, how Bitcoin works. And by the way, that process of maintaining the database is known as Bitcoin mining. The answer that, the question that many people ask is, well, how do I get Bitcoins? Well, there are three ways that you can get Bitcoins. One of them is by mining them. I wouldn't recommend that. The system is now so advanced, you need hugely powerful computers to do this. The other way you can get Bitcoins is the same way you get normal money. You can earn Bitcoins, you can steal Bitcoins, or you can buy Bitcoins. And it really is as simple as that. You say, I offer my services to you, and the fee for my services is, 1 Bitcoin an hour, or whatever your rate is. And that is how you get them. And by the way, let me just tell you a story, a little story. Here's what you could have earned. Bitcoin was invented in 2008, and I followed the writings of the chap who invented it, and he was getting more and more irate at what was going on in the world of banking and in the world of central banking at the time, and it was very much a reaction to all of that. But what he created inspired a really kind of diverse range of people. Anarchists liked it, libertarians liked it, computer coders obviously were tremendously excited by it because it solved this problem that had been confounding them for 40 years. Economists loved it, the idea of a money without government. Speculators loved it because it was rising and falling. Criminals liked it because they were able to use it to transact their illicit deals. Entrepreneurs liked it. It inspired a kind of, I don't know what the collective noun is for a group of devotees, but we'll call it a cult of devotees. It inspired a cult of devotees. And it was invented in 2008, and while the world was busy panicking about the global financial crisis, this chap who goes by the name of Satoshi Nakamoto posted a message on an out-of-the-way mailing list. And he said, I've been working on a new electronic cash system. It might make sense to get some just in case it catches on. And it was 3 days before he even got a reply. And in the end, the way he got a reply was he had to get his mate to reply to the message. And a year later, the first Bitcoin exchange rate was published by an aficionado who went by the name of Liberty Standard. And he calculated the value of a Bitcoin by dividing the amount of electricity that his computer consumed over a 30-day period by the amount of Bitcoins that it generated. And he arrived at the figure of 1,309 Bitcoins to $1. And everyone, he said, this is the figure. And everyone said, no, you're valuing it too high, you're insane. And actually, what happened over the next month is the Bitcoin price actually fell, so that by December 2009, there were 1,630 Bitcoins to $1. Fast forward 4 years, November 2013, one Bitcoin is now worth $1,240. It's the same price as an ounce of gold. And if you had bought the low and sold the high, and we all know how easy it is to do that, we all do that on a regular basis, you would have made 2 million times your money. You would have turned £1 into £2 million. So that's what you could have earned. Now, ladies and gents, I have to say, I am not particularly bullish about Bitcoin itself at the moment. Again, there are many who would disagree with me. I think it's at the wrong place in the hype cycle. And if I've got time, I'll describe what I mean by the hype cycle later on. What I am bullish about, incredibly bullish, is this technology behind Bitcoin. Bitcoin is in a bear market. We all know bear markets can go on for a long time. And I think it's already down something like 80% from its highs, and it's down, I think, 30% this year alone. It is in a bear market, it is in a downtrend, and the market timers can decide when the lows. But what I am excited about is this thing called blockchain tech. And so, even though Bitcoin is still a long way from mainstream adoption, coders can see that the breakthrough tech behind it works. And by the way, this is quite interesting. The online black market, the dark site, the black market sites of the dark web are booming at the moment. And one of the reasons that they're booming is Bitcoin. And you know, you can go onto these websites and you can buy drugs or any kind of black market thing you care to think of. I'm not going to list all the black market items that I can think of because I don't want to reveal the dark side of me too much to this established, to this bright audience. But you can buy pretty much whatever you want using Bitcoins anonymously. And you know, black markets were the first markets to turn the internet to profit. They have a long history. They don't have deep pools of venture capital to fall back on. They have to make tech. If a new tech's going to work, they have to make it work quickly. And the fact that black markets are using Bitcoin is testament to the fact that it works. And by the way, I'm not endorsing black markets for a second, just in case the police are in. Now, so blockchain tech. What else can this tech be used for? And as I say, coders are looking at it, and they're finding all sorts of other uses for the blockchain beyond an alternative money system. What the blockchain is, essentially, is a structure of permanent memory. It's so far proved unhackable. So it's a structure of permanent memory that keeps on growing organically. So if you keep that idea in your heads, this structure of permanent memory that keeps on growing, and it's a wonderful record. And in fact, I was reading in my children's history book about the Doomsday Book and how William the Conqueror's Doomsday Book, this record, how significant this record of ownership was in our history. And without wishing to sound too over the top, I think the blockchain, this new way of proving ownership, could prove extremely significant. So, the blockchain technology can be used in communication. If you think about this idea of decentralization, communication between two people with no third-party involvement. So there are now new systems being developed by which people can communicate with each other without third parties, Gmail, iMessage, Facebook, WhatsApp, Twitter, LinkedIn, or whoever it is, having any access to what's been said. A bit like an old-fashioned letter in an envelope. And this has enormous implications for privacy. So, communication, that's one area of blockchain technology. We're going to talk about ownership. It's an incredibly quick and efficient way of proving ownership and also exchanging ownership. And this has implications for the way that ownership and the trading of financial assets is currently conducted. Share registrars, stock markets, bond markets could very easily soon be using some kind of adaptation of blockchain technology. Not just financial assets, land, vehicle ownership. The Isle of Man is already rumoured to be recording its land registry on some kind of blockchain. Some of you may know I think he won the Nobel Prize, the economist Hernando Soto, and he argues that what is holding so many people in the third world back is this is lack of title, lack of clear property title. Recognised and protected property title is essential to economic growth, and the blockchain is going to have all sorts of effects on this, all sorts of impact that many people haven't even yet envisaged. Again, I repeat this phrase, a structure of permanent memory that grows organically. It opens up enormous possibilities in the worlds of accounting, in the world of finance, in insurance. It's going to ensure transparency and eliminate possibilities for fraud. And particularly accounting and insurance, these are industries that haven't been transformed by the internet in the way that, say, publishing and music have. There are also new systems of notarization, companies like Coinsilium and Proof of Existence are already doing this. Now, another area, the legal profession. I'm going to talk now about something called smart contracts. Who thinks they understand what a smart contract is? One person, 3, 4, 5 people. A smart contract is a, how do I define it? A automated system of enacting a contract. So let me give you an example. This is a good example that Coindesk use. They use the example of a dog walker. So you go off to work and you leave your dog at home, and it has a little GPS in its collar. And the dog is picked up by the dog walker. On completing the walk, a signal is sent from the collar, and the contract, the smart contract, automatically executes a Bitcoin payment to the walker. So that is an incredibly efficient system there. And you can see from that example how the blockchain is going to have a huge role to play in the Internet of Things. There's now a new blockchain-based mobile phone operating system. So instead of Mac OS or Android, there's a new system being developed called Trustonic. These are some other possible functional applications for Bitcoin I'm going to list out now. The elimination of spam. What's being talked about? A Bitcoin, one Bitcoin I think is currently worth about $220, so £160, something like that. But it is divisible to 8 decimal places. So it's possible to make the tiniest payment. One of the reasons why fiat money is preferable to metals is because even though metals are divisible in the sense that you have gold, which is worth more than silver, which is worth more than nickel, which is worth more than copper, fiat money is very, particularly digital fiat money, it's very divisible, but only to a penny. Bitcoin is divisible to 8 decimal places, which has huge implications for micropayments. And we might see systems arising where somebody has to pay you a tiny amount to receive an email. So, to send you an email. So if somebody wants to send me an email, they have to pay me, you know, an eighth of a penny. That's going to have a huge impact on spam. Similarly, we might be moving towards an era of more paid content on the internet. When you see an article and you like that article and you click like or whatever you click, there may also be options to pay that person, the author of the article, you know, again, an nth of a penny, a tiny amount. Or even these sites could require micropayments to view sites, video sites, news sites, blogs. It all happens at the click of a button. Very efficient way of making tiny payments. And in fact, I'll quickly discuss payments and remittance, which is another area that is going to... these numbers are from Goldman Sachs, their IT analyst, a chap called Roman Leal. In 2013, 550 billion was transferred globally, and this generated $49 billion worth of fees. Like I say, a Bitcoin, you can send and receive them for nothing, but assuming you use some kind of payment provider, Leal used the figure of 1%, those fees fall to 5.5 billion. I mean, that is just an enormous saving, over 90%, saving of 43 billion. If Bitcoin was used for electronic payments in retail, currently in 2013, $260 billion of transaction fees were levied on $10 trillion worth of sales. If Bitcoin had been used, Leal calculates there would have been a saving of 150 billion. These are his words, small merchants will benefit most, reducing payment processing fees by half. That is especially attractive to low margin businesses. Bitcoin's going to be using crowdfunding. That's already a growing business. I know one company that's going to be using some kind of blockchain technology to handle the payment of the company's salaries, much quicker than getting a bank to pay everyone in the company. Another area related to ownership, online identity and reputation. I got a taxi here, I got an Uber here earlier today, and I was just thinking, you know, the Uber driver was telling me that my Uber rating is 4.8, and I discovered that his rating was 4.73 out of 5. This digitisation of your reputation, it's fascinating in my opinion. If you think, you know, go back 100 and 150 years ago, how important, you know, the reputation was to the 18th or the 19th century gent. And in the kind of cities today where, you know, nobody really knows anyone beyond your little circle of friends, the kind of people aren't so defensive of their reputations as perhaps they once was. But the digitisation of reputation is a new phenomenon. I think it's very interesting. It's hopefully going to bring about a wholesale improvement in behavioural standards. But if you think of your Uber or your eBay or your TripAdvisor rating, anyone who works, who uses TripAdvisor, I just look at customer reviews and decide whether I'm going to go to a restaurant or stay in a hotel or not. And so as a result, hotels and restaurants or anyone who's selling some kind of service to tourists is hugely defensive of their TripAdvisor ratings. And the blockchain is going to have a huge role to play in that. It's also a very efficient way to prove identity, and new voting applications are being developed using the blockchain, whereby you can actually audit your vote and make sure it's counted, even with your anonymity protected. And I think we've got this general election coming up. It's pretty clear it's going to be a hung parliament of some kind. We seem to be headed into an era of smaller, maybe not small government, that's the wrong word, weaker government, lower majority government. And new voting applications, again, you know, you could argue that our system of representative democracy is neither democratic nor representative, but if things can be voted on quickly and efficiently, that could potentially usher in an era of more direct democracy and also more referenda. So I think we're many years from that happening, by the way, but the technology will be there. And if there's enough lobbying, maybe we'll see it introduced, who knows. Again, I remind you of this idea of decentralisation, taking out the middleman. And if you think about the vast numbers of middlemen currently operating in the NHS, in healthcare, in welfare, education, all sorts of tech companies are going to start winning government contracts. They're going to have some new technology that takes out these middlemen and hopefully gets all these government services working a lot more efficiently. So, ladies and gentlemen, I have a line in my book. The blockchain is going to change the way we do things, and the implications are enormous. Some people are saying it's as big as the internet. I'm not sure it's quite that big, but it is pretty big nonetheless. And so I say the revolution will not be televised. It will be cryptographically secured on the blockchain. So I have talked I'm going to talk about one little thing. It's a nice little story. It only takes me 2 minutes. Landlines. Who has a landline in the room? Probably more than half the room. Who actually uses their landline? 5 people. Who doesn't have a landline? Okay, half the room. Who only has a landline because they need it to get the internet? Okay, there you go. The landline is pretty much redundant. Now, at the peak of the landline, which came, by the way, in 2008, there were 1.3 billion landlines worldwide. And with a global population of close to 7 billion, you might have expected that number to be higher. People like to communicate, telecoms companies like to profit from people communicating, and they'll lay cables anywhere if they think they can make money out of it. And if they haven't, it's because they felt they couldn't. A recent UN study revealed that there are 6.3 billion people worldwide who now have a mobile phone. In fact, there are more people that have a mobile phone than have a lavatory or a toilet. And that stat proves quite categorically, as if it needed proving, that the desire to communicate is there. So why did the landline fail where the mobile succeeded? And the obvious reason is the superior technology of mobile telephony has made widespread coverage cheaper. But there's something else, there's an elephant in the room. Most poor people, most people in the developing world, are unbanked. They didn't and still don't have the basic financial services you need to get a landline. You need credit and or a bank account. They might have wanted one, but they couldn't get one. The telecoms companies concluded that the demand wasn't there and the infrastructure was never built. So the financial system was actually a barrier to progress. With a mobile phone, you don't need a bank account. You can buy the phone and the airtime with cash. Anyone can get a mobile, banked or unbanked, and they have. The World Bank actually estimates that 50% of the global adult population doesn't have access to basic financial services. Only 2 billion people are banked and take part in e-commerce, and yet somewhere between 3.5 billion and 5.5 billion have at least some access to the internet. So, and I'm slightly manipulating statistics here, but nevertheless the point remains, there are 3.5 billion people, half the world's population, who are excluded from e-commerce because they don't have access to the necessary financial infrastructure, despite the fact that they probably want to trade, exchange, earn money and improve their lot. But thanks to Bitcoin and other forms of mobile money, the M-Pesa in Kenya is the best example, this barrier is being broken. You don't need traditional financial services or indeed a current account anymore. A bank account is useful, of course, but it's no longer essential. And as each day passes, it becomes less so. To participate in e-commerce with new forms of non-bank money, if you like to call it that, all you need is internet access. And most of the world's population will have that long before they have proper sanitation, healthcare, education, or anything else. So I'm suggesting traditional banking is about as redundant as the landline. Suddenly, the developed world is going to have 3.5 billion more people to exchange products with, to exchange services with, to outsource jobs to, and so on. And that's a quite mind-boggling amount of new trade. The money that the unbanked 3.5 billion might make might enable them to buy the sanitation, the education, and the healthcare that they haven't had for far too long. And so rather as the Industrial Revolution enabled people to escape rural poverty and within a generation become part of a new educated middle class, so might becoming financial revolution, as I've just dubbed it. Ladies and gents, that's my time. Thank you very much for listening to me.
Dominic, so we all know now that we have to buy Dominic a drink after this to find out what he's doing on the dark web. As Dominic outlined there are so many possibilities for blockchain technology, but one thing that's really hot at the moment is fintech, and blockchain fits in beautifully to this sort of boom we're seeing in the fintech industry. And so to talk to us more about that and how we can get involved with blockchain and Bitcoin in terms of investments and for portfolio, I'd like to welcome Daniel Masters from the Global Advisors Bitcoin Investment Fund. Thank you very much.
Thank you. It's daunting to come after an author of the definitive book, but I'm going to do my best. I'm just a dirty commodities trader, but we have our tricks and trades too. I'm going to talk about four things. I'm going to talk about the blockchain very briefly. I'm going to talk about my investment thesis about the price of Bitcoin, which you won't be surprised to hear differs dramatically from Dominic's. And I'm going to talk about the nuts and bolts of our particular investment fund and specifically the challenges that we faced in bringing it to market. So quickly, my encapsulation of Bitcoin, the currency, is the first and only currency as a content type. And I think we're all familiar when we email or we tweet or we YouTube or Google+, that it's quite easy to embed images, text, information, sound into such a electronic communication. Bitcoin is the first incarnation of being able to embed cash in a digital way in exactly the same form as your other content. I'll give you an example of something you can do with Bitcoin that you just can't do with alternative forms of money. We recently invested in a company that's run by a 16-year-old schoolboy who has an app that interfaces with Twitter. So if you are having an event, a restaurant opening or a concert, you would have an Evite type of invitation that you would send out, and there would be some sort of @ or hashtag your event on Twitter. You would then, as the promoter, subscribe 100 bitcoins or 25 grand to this platform. We take a cent or something like that out of that money, leaving 24,000 and change left for a pot. And what the algorithm then does is it trawls Twitter for any retweets or mentions of the @ hashtag or of your event. A natural language engine will then determine what the quality of the retweet or the mention of your event was. So words like good and fantastic and fun will score well, and words like boring and useless will score badly. And if a tweet is deemed to be a positive tweet, then the algorithm will go to a second step and determine whether you are a good tweeter. Now, I have about 24 followers. Beyonce probably has 8 million followers, so the algorithm doesn't really care if I retweet about this event. But if Beyonce says, this is going to be a wonderful gig, I can't wait to go, it's going to be fantastic, and she has 8 million followers, she will automatically be sent money in return for promoting that event. So, there is an argument for the Bitcoin, the currency, that says it's cheaper, it's faster, it's global. About a year into my two or so year voyage into Bitcoin, I began to see it more as this currency as a content type, and not really a competitor for dollars or pounds. I think that's a mistake a lot of people make, but certainly a price competitor at certain segments of the market for fiat currency, but also a currency that can do stuff that cannot be done any other way. Blockchain, I echo Dominic's sentiments on that. I think the implications there are huge. The analogy to me is thinking about the blockchain protocol as TCP/IP, the internet, Bitcoin as the first application on that protocol, email and the internet, blockchain and Bitcoin are kind of parallel constructs. When we did the internet, we didn't really conceive that Facebook would be the biggest media company with no content, Airbnb would be the biggest hotel company with no hotels, Uber would be the biggest taxi company without any taxis. These things were not conceivable when the internet happened, but the internet made them possible. And I think with a blockchain, there are the known knowns, the unknown unknowns, and the known unknowns. And therefore, we're not quite sure what's going to come next. But I can certainly envisage a situation where you walk into an unmanned parking lot, you find the car that you know you want to buy, the new car, there's a sticker on the window, you pay for it with Bitcoins. It tells GM that that car is now yours. Your iPhone then unlocks the door. Your license is updated at the Department of Vehicles. Your insurance company is informed. All of these things are registered indelibly, immutably, and in a synchronized way across the blockchain, and you drive off in your car. These are things that the blockchain can facilitate that just simply can't be done any other way. And there are variations on this. There will be private coins, there'll be altcoins, there'll be private blockchains, there'll be central blockchain. But to my mind, none of this really works unless the fundamental blockchain of Bitcoin works. If that's so good, if all these other things are so good, I believe that the first instance, the first use case should endure. So that's currency and blockchain, just briefly. My investment thesis is pretty straightforward. I'm a commodities trader by profession all my career. I've seen a lot of markets mature significantly over long periods of time, and Bitcoin looks like an early stage commodity to me. And there are many ways you can view it. That's my view. And I work it backwards. I think to myself, in a number of years' time, do my unborn grandchildren go to an ATM machine, take out paper, go to a shop, that paper goes to another man who puts it in a van, who puts it back in the wall? Not going to happen. I think that 1 billion users, whether it's a third of Twitter, a third of Facebook, a third of YouTube, a third of Google, will end up with $100 of a balance. I have significantly more than that, and I'm sure a lot of people in this room do too. but let's just say a very broadly distributed, billion people with $100 of Bitcoin, that's $100 billion of Bitcoin, notwithstanding any elasticity in the exchange between Bitcoins and fiat. Let's call that 100 billion, and 3 billion today, that's a 30x return. It's a very simple calculation. I could be dead wrong, but it certainly is more appealing to me than trading crude oil or gold. I know that's not going up 30%, and I think this might. And I think the oil analogy is actually very good. I started an oil fund in 1999 when I knew that we needed more oil, and I knew that there'd be more demand, and I knew there would be depletion, and people weren't really talking about these things. And I didn't see how oil could increase in production at the price it currently was. So you kind of work the logic backwards. You say there'll be more people using this in the future. What has to happen economically in order to make that happen? Well, we needed wind power, solar power, shale, fracking, and all this stuff. This wouldn't happen at $17 crude, therefore you buy crude and it goes up. And in fact, the genesis of the price move in commodities and the so-called super cycle was really engendered with institutional investors. And they came to the party when they saw a story and they saw a vehicle and they saw some price momentum. And there was tremendous institutional buying of commodities. I mean, let's take oil as a benchmark from $20 to $30 to $40, and it hit $140 in the end. And that was a function of institutional investors seeing this momentum, seeing the story, having vehicles which multiplied over time. We were one of the first companies, I think we were one of the first of 3 companies that gave institutional investors direct access to the commodity futures markets. They chose to do it through us because it's difficult to handle. It's difficult to handle the operations, the compliance, the position limits, the volatility, and so on and so forth, execution. They chose us to do it, and that was a successful product for us. And that's what led me to Global Advisors Bitcoin Investment Fund PLC, and that's my final subject. So I thought let's do the same thing again. Let's create a vehicle. Let's tell a story. Let's see if we can find if there's some price momentum in the market, and see if we can bring in institutional investors. I'm very pleased to say that last week we got our first institutional investor. It's been a long road to do it, but we finally succeeded, and I'm hoping there's going to be many more. We're based in Jersey, in the Channel Islands. I walked into my regulators and I said, can I start a Bitcoin fund, please, and can you regulate it? And they said, what's a Bitcoin? And I explained it, and they really weren't very happy when they figured out what it was. And a few of their analysts had pulled the illicit use and the crime and stuff that had been going on with Bitcoin in the past. And so what I explained to them was that this is a great piece of financial engineering, financial technology. Jersey as a jurisdiction is a very financially based place, and it needs innovation. And that, we convinced them, that the regulators, that they shouldn't be shy of this, because the key to financial engineering is taking a difficult, knotty problem and cleaning it up. That's what you get paid to do. And so we went through a long and arduous process with our regulators in order to fit Bitcoin into a regulated structure. We have what's called a collective investment fund under Jersey Collective Investment Fund Law of 1988. It's an expert fund. It's open only to accredited investors, so high net worth institutions and everything in between. And we had to engineer it in a way that sort of filled some gaps that existed in what was known to be a sort of a legitimate regulated fund, and what we had available to use. So the key elements here are essentially acquisition and disposal of bitcoins, the operation of bitcoins, and the storage of bitcoins. And I'll touch briefly on those 3 areas. We are placed on. We are given a huge burden to actually be careful about who we trade with. Bitcoin is and can be used for illicit purposes. We cannot be associated with that. So there are probably, we've identified maybe 80 places, 80 discrete sort of specialists of various kinds, be they miners, exchanges, wallet providers, and so on, where we might source bitcoins. And we have a graded list. So we can deal with about 1/3 of them. We may be able to deal with another 1/3 of them, and the last 1/3 we'll never be able to deal with, because they're Chinese exchanges who won't even speak English. So we're very sort of tightly restricted on who we can deal with. And the onus has been put on us to actually maintain and monitor those relationships. We have to do on-site visits to all of our providers on a biannual basis and verify that the KYC is being done, the AML is being done, the CFT is being done, and all the other acronyms that mean, you know, don't deal with terrorists. We have to do that. So that's the acquisition and disposal layer. Then there's the operational layer. We had to find a fund administrator who was capable of administering Bitcoins, and no one had ever done this before. We were fortunate that one of the large local administration companies had a CEO who was a Bitcoin enthusiast, and he pushed it very hard along with us. And we had to engineer an entire process which had to be signed off by the regulators, so that, you know, this is a new form of moving cash. And as we started to, the fund is now 6 or 7 months old, as we stood over our administrator's shoulder, literally, in the early days, you know, we identified a number of holes that we've subsequently plugged. And, you know, this is pioneering stuff. You know, I wouldn't say it's without risk even now, but, you know, we do what we can do. So that's the middle layer. And then finally, probably the trickiest part of the equation, and this pertains to our regulated fund and will pertain to any investment vehicle of decent sort of category going forward, is the custody of Bitcoins. Because while the exchanges are risky, we've all heard about Mt. Gox, in actual fact, the time, you know, if you're smart, you spend very little time with your Bitcoins at an exchange. You send your money, you buy your coins, you evacuate your coins very, very quickly. So the exchanges and the venues of purchase and sale are kind of the most risky, but you don't spend much time there. The place where the Bitcoins spend most of their time in our fund, it is essentially a long-only buy and hold fund. You know, my price target is about $10,000 a coin. There's not much point in being short when it's trading $250. So we buy them and we hold them. We have some partners who I think are represented here today. Elliptic Vault, they're our lead custodian. We've had other custodians, and we endeavour to have more going forward. But the role of the custodian has to be, again, vetted by the regulators, and that requires fit and proper people tests, financial wherewithal tests, audit tests, disaster recovery plans, and in the particular case of custodians, the actual technical security plan that underpins the work they do. I wouldn't say our regulators actually understand the way that the custodians technically store the coins, but they wanted to be sure that the document was available, that we understood it, and that we would vouch for it. And so all these things have now come together, and indeed we have a fund in operation. And I believe that, you know, while these technologies around blockchain are really interesting, most of them involve payments of some kind. The issue I have with Bitcoin not going up, the issue I have with the price of Bitcoin being so low at the moment, is that in practice, this wonderful technology doesn't work if you don't have more than $3 billion worth of these coins. There's just simply not enough to go around. So a company like ours, I believe, and others, you know, we actually support other people doing the same thing, because I think, you know, there's definitely a case of the more the merrier at the moment. I believe we'll follow a similar path that we followed in the oil market. I think the smart investors come in first. I think the price goes up second, and I think all these other technologies get built out third. And that's the way I see the thing panning out. With that, I'm going to say thank you very much for listening, and I enjoy taking some questions from anyone afterwards. Thank you.
Thank you, Daniel. I think one of the things that Daniel touched on really well is that we're looking at this momentum building, both in the financial space but outside of it. And one thing I just want to touch upon is that Daniel's operating in Jersey because there are issues about regulations and compliance and everything else that's going on. We are actually seeing huge movements in London towards giving us answers about what we can and can't be doing, and that's why sort of being based here in London at the moment, when you're investing in technologies and things, is a great place to be. There's a huge amount of support going on, and I'm sure you've all seen in the news what's happening with the Treasury making announcements. One of the crime sort of stopping organisations, the name eludes me at the moment, said that Bitcoin isn't a great way to be committing crime. So we're seeing a lot more support coming out, as this ongoing momentum happens. And on the other side of that, we're seeing hundreds of millions of dollars going into this technology in terms of investment. So right now is an exciting time, both from the price point of view, but also from the, sort of the back end point of view in terms of the infrastructure. And with that, I'd like to invite Eddie Travier up here, who's the CEO of Coinsilium, to talk to you about the opportunities in this space. Thank you.
I'm not going to speak about all the opportunities at the moment. I would like first to briefly introduce you Coinsilium. First of all, I'm very pleased to see this room full of people interested in this space. We started in 2013. In summer 2013, we could feel there was something going on with this Bitcoin, and my partner and the CTO of the firm, Hakim Amoni, who's here, introduced me to Bitcoin, and I felt that there would be a wave of entrepreneurs, and there would be a wave of startups and new companies coming from this technology. At first, most people were focused on the price. Most people were focused on the fact that you could buy low, sell high, and many people did a lot of money from that. But for us, the main interest has been to invest in those companies that actually help you do all the great things that Dominic and Daniel have been talking about. So basically, if you don't have the ecosystem to support these startups, if you don't have the venture capital, if you don't have the seed funds for these companies to come and do and produce these services and these products, then all these great things will never happen. And as an investor, financially, it's also a great time to be in, because if you are at the beginning, and of course the easiest parallel is the internet, if you were at the beginning of these first companies that were doing the portals and the search engines and the tools and the applications for that, then the chances are you'll be making a lot of money. So the idea here is we are really helping and really investing at the right time, at the early stage of this industry, of the timing of this industry. So I would like just to introduce you the team. So basically we have Hakim, that I've mentioned before, the CTO, Chief Technology Officer, which has an ideal background for this, because he's an IT engineer and he has been working in many banks and even in central banks. So he has this ideal combination of skills in finance and IT. Then we have Malcolm Paley, who is our commercial director, who has a great experience in bringing products and innovation to market. And by market, I mean to commercial viable products and services. And we have the chairman of the company, Cameron Parry, who has an experience in leading and directing a public listed company, which is also something very important for us. I've been working in private equity. I've been based in China, and I've been working in Hong Kong for the last 10 years. And when we started this venture into Bitcoin, we did the first conference in this area, the first Bitcoin conference in Singapore in 2013. So we were very early stage. Many VCs hadn't heard about this technology and this new cryptocurrency. So we have been educating a lot of your peers, a lot of people in the financial community. The cornerstone services that we want to provide as Coinsilium are basically, we want to invest, we want to develop, we want to make these startups grow. So we have many services around in addition to investing, and we also have acceleration. So we have been providing incubation services through Sitcoin, which was the first company we created in that space. And now we want to accelerate, we want to continue helping these entrepreneurs all around the world. We'll explain a little bit where the type of companies we have been dealing with before. And the other thing we want to do also is to help them communicate. So this is another one of the services of Coinsilium. The other important thing is that our approach is a fintech approach. So I think Dominic was mentioning financial is helping, for example, the unbanked in the world. I think financial services are very important, but also the technology. So it's really a fintech play here, and that's our angle of approaching the market, fintech. It's a booming industry, but blockchain technology is very important. It's going to play a very important role in that area, fintech. So this is our approach. Until now, we've been investing in several companies. One of our entrepreneurs is here that we have met almost 2 years ago now, and is based in London. We have invested in trading platforms, in wallets. Wallets are key service, a key product for what we're doing and for using Bitcoin. So all these transactions that you can do have to go through a wallet. So we're investing in wallets, trading platform, exchanges in emerging markets. We've been investing in software also, and the payment processor. So basically we started with the infrastructure of the Bitcoin ecosystem. And now we're looking more at all this potential from the blockchain technology. So now we're looking at new services that are harnessing the potential of blockchain. And that goes, as Dominic was explaining, goes very, very far. It goes into public sectors, goes into settlements, clearing, goes into a very wide range of services in both public and private sectors. So this is what Coinsilium wants to do. And so the idea that we have is that we want to raise funds to enable us for the operations and enable us to invest in these companies. So the aim is to be listed on the London Stock Exchange AIM in June, July this year. So this is why we're here.